Hello traders, I'm just gonna provide a quick update on gold. We haven't created a video for a while, so let's discuss gold. And this is the weekly chart. I've highlighted this level, the 2011 old record high. And what I'm gonna do is I'm gonna sync this chart to, oh, it's already synced to all my time frames. So you can see on the weekly that we went above this, came back down, tested it several times, then we broke down big on this particular week. Price then retested it from the downside and it reacted by going lower, but there wasn't much follow through on the downside. So that to me suggests that gold is perhaps gearing up for a potential break higher. Don't forget that the long-term trend has been bullish, so we are obviously still bullish and will remain bullish until we see a significantly bearish development both from a macro point of view and from a technical point of view. So on the daily then, that's the pivotal level that we just spoke about. And what I'm going to do is, highlight a few things that I have noticed in the last few days or weeks even. This particular candle, big bearish candle, when it was created, I thought then, gold bears had a very good chance to then come in and really apply the pressure to push the price of gold down. They didn't. Then we had a similar candle here, big down day. And yet again, as soon as gold tried to break the low of that candle, this was the low of that candle. Notice how it immediately was rejected. So as soon as it went back above, we've been pushing higher. And yet again, we saw this red candle right here. And once again, if I mark out the low, you can see that every time it went below it, it got immediately rejected and it has pushed higher. So what I'm trying to say is that the bears are getting trapped, and the biggest trap was perhaps this one here. This was the August low. I've previously spoken about the importance of this level, haven't I? You can check my other videos and analysis articles. This is where the big trap happened in my view. Price broke below the low of August. Didn't hold there. Had a few attempts to break below it, but then it got rejected, and then we went back inside the range. That's where I think the sellers run into trouble. And since then, if I mark out the high of this candle, you can see that every retest of that level has been supported. Among other bullish developments, you can see that gold has also broken out above this trend line. It hasn't been a clean break, but it's holding above it. That's the important point. There are so many ways, obviously, you can draw it. You can connect this high with this one, and even above that one, you can see that it's broken above it. So what we want to see today is a hold above the 2011 high at 1920-ish. A hold above that would suggest to me that the price of gold is ready to stage another potential rally. Among other levels, 1915 or 1914 is really important to watch, because that's the base of the breakout, and it ties in with Tuesday's high. So I think if you look at the lower time frames, let me just sync this to my lower time frames. You can see that this level has been tested already right here. Let's zoom in further to the 15-minute chart maybe. This was the high from Tuesday. You can see that price came down to test this level, and it's gone higher from there. And even on this lower time frame, you can see how the sellers are getting trapped. We formed a low here. Price tried to break through it, failed, came back down one more time before pushing higher. So it looks like gold has potentially carved out a bottom and is about to stage another rally. So where do we go from here? I think if you look at the weekly chart, the first level I'd like to mark out would be the high from last week. previous week high. So this is the high from last week, and I think there will be lots of stops resting above that level from people who have been selling gold short. So from the trapped traders, I think there's a pool of liquidity resting there, namely buy stop orders. So we may see an accelerated move to take out that pool of liquidity possibly later on in the session. There's more liquidity surely resting above this big red candle on the weekly, or black candle I should say. So if we hold above 1933, let's assume we'll get there. If we get above 1933, then, and if we can hold above it, then the next target would be the high of this red candle at 1955. What you can also do is you can draw your fibs. Let's go down to the daily again. You can draw your fibs from the high to the low. The most important one I think is the 61.8. For some reason, gold tends to react more to the 61.8 than the other retracement levels I've noticed. That 61.8 also comes in just below the psychologically important 2000 level. So that makes it more likely that we'll see some kind of reaction should gold get there. Now, obviously, as traders, we have to trade responsibly, especially when there's leverage involved. And we have to admit to ourselves very quickly if we've got something wrong. Okay, so in this case, for me, the invalidation level now is the Tuesday's low, because that was the last low that was created prior to this latest breakout. There's no reason for gold to retest that level now if things are still bullish. So a break below 1894 would be a bearish development for me. At that point, I'll drop my short-term bullish view on the metal. Also, notice that there is a trend line coming in around that level. So obviously, if we go below it, it will have broken this bullish trend line as well. So gold is looking bullish. I think a similar picture is can be observed on silver. If you notice from my previous analysis articles, this was the August low. I mentioned this level several times, which is very similar to the level we saw on gold. What I wanted to see was a false break below here. It looks like we may have had that false breakout here, and the fact that gold has gone back above this level is important. Silver. So like gold, I think silver has broken out. And also notice how bearish looking candles like this one, for example, has failed to bring out the bears. This was a, what do you call that, inverted hammer? Should have gone down after the formation of that candle, right? It didn't. Big bearish engulfing candle, no downside follow through whatsoever. So thanks to silver's recovery, one of our trades have now hit the target. If I can show you. So this was the initial idea behind the trade signal I issued to the group. Then silver had just risen above the August low I was talking about. It was holding its own inside this bearish channel or bull flag, depending on your view, and also above this rising trend line. The trigger for me was basically the formation of this hammer-like candle at the trend line, and the fact that it had gone back above the August low. I thought then that it was a good time to get long. So when I issued that trade, it initially went up a little bit, then went a little bit higher. At that point, it looked like it was going to hit our first target at 25. It didn't. It came back down, nearly stopped us out because we had raised the invalidation level to just below or at the entry level, which was below these hourly lows. If I can zoom in. The reason why I had moved it there, it wasn't to remove the risk just for the sake of doing it, but because of the fact that that level just happened to be below these lows. So we moved the invalidation level there, and luckily it didn't stop us out, and silver has now pushed higher to hit our first objective. The second objective, by the way, is at 26. Similarly, we have a trade on gold. We went long. God, when was it? So yeah, we went long gold right in here in this big drop. As prices were dropping, I issued the long trade signal, which I will show you in a minute. In fact, let me just show you that now. This was it. The invalidation was at 1880-ish, which was the low below this candle. And luckily, it came really close to taking us out before bouncing back from that level. So I don't know where my subscribers went long, but some of them I know for sure went long, and prices have continued to kind of consolidate initially before breaking higher. So once it started to push higher, I decided to tighten the stop loss to just below this low, because this is the last significant low prior to the latest breakout. And our target is at 1943. That's our first target. Now the reason why I have selected that level is because if you look at the daily time frame, that level is a naked level. When gold broke down below it, it never retested it on the daily time frame. So that's why I've selected that as our first objective. My extended objective is well, I've chosen 1975, the liquidity above this swing high here, because there's a potential for a swing failure pattern to emerge there. But there's no reason why it can't be a little bit higher, maybe the 2000 level where the 61.8 Fibonacci level comes in as well. Obviously, not all of our trades have worked. I'll show you one that hasn't worked, the dollar yen. Very frustrating. We went short somewhere around here because there was a breakdown in market structure. You can see that this was the low. So, dollar yen broke that low, came back down. When it was hovering around there, I thought it's going to break down. It broke down, but then it stopped going down. So once it broke down, I moved the stop from where it was to just above the high of this area here. It then consolidated for a while. It looked like it was going to break down, but it never really materialized. And instead, it just broke up and broke higher and took out my stop before tanking. Typical, isn't it? This goes to show that sometimes, actively managing your position is not the best decision to make. Well, in this case, we only lost very little because the invalidation had been just above our entry area. But had we left the stop where it was, it will have never tagged it. So sometimes active management works in your favor, sometimes it doesn't. I would rather manage my positions than not, because on the occasions that I do actively manage it, the losses tend to be a lot smaller than would otherwise be the case. So yeah, there you go. Things like that happen. But anyway, let's look at the dollar index. Dollar index is trending lower. Previously, I was watching this at 94.65 level. This was the most important level from a bearish point of view, and it held because that level was formerly support, and it turned into resistance. Interestingly, we also formed a bearish trend line right at that level. So, dollar index is making lower lows, lower highs. So I think it's good news for precious metals. All right, take care, guys. Speak to you soon.